Hello traders, welcome to the daily technical forex report for the 14th of December. My name is Edward Shinetsky. I am a technical analyst at rforex.com, and as usual, we begin our forecast with the USD currency pair. The price didn't show any significant movement and still located within the local consolidation between two strong volume levels. The first one is the support 1.1267. The second one is the resistance 1.1463. If we take a look at our volume chart, here we can note that the large volume is concentrated within this consolidation. Hence, the best solution with the euro is just to wait for the breakout of one of these levels and the exit of the price from the range. Furthermore, this movement must be supported by the large volume, which will ensure us against a false breakout and will be a more secure signal for entering the market. While the price is located inside this range, we'd better omit this instrument from our trading plan. The pound. The price continued growing smoothly, but the movement was on the small volume, therefore we can't either point out any new volume level or zone or consider long positions at the moment. And given the presence of the strong downtrend with this instrument, we still should prefer a scenario of opening short positions. However, we can enter the market after a stoppage of this growth and a resumption of the sharp drop supported by the large volume, which will be a more reliable and accurate signal for entering the market. A stop loss should be located above the beginning of this move, and a potential of the deal is more than 100 points. So with the pound, sales after the resumption of the sharp drop of the pair. If the price goes on rising, we'd better stay out of the market. The yen. The price tested the level of resistance, the upper limit of the local range 113.62, 113.75, but couldn't break it out. Nevertheless, it is still located near this mark. That's why we can and should consider a scenario of its breakout, which will allow us to open long positions. The search of the pair must be confident, abrupt, and supported by the large volume. A stop loss should be located below the breakout volume bar, and the potential of the deal is around 80 pips. So with the yen, long positions after the sure breakout of the level of resistance. Our next instrument is the Canadian dollar. The price remains trading in the middle of the local range between the support 1.3270 and the resistance 1.3429. Hence, our previous scenario remains relevant. We can regard new positions only after the confident and sharp breakout of one of these levels and the exit of the price from the range. Furthermore, the movement must be supported by the large volume, which will be a more precise and secure signal for entering the market. While the pair is located within this range, we'd better omit this instrument from our trading plan. The Australian dollar. The price showed an abrupt drop and now is testing the level of support, the lower boundary of the local range 0.7183. Hence, we can consider a scenario for its breakdown, which will be a great bearish signal and will allow us to open short positions. The sink of the pair must be supported by the large volume in order to ensure us against a false breakout. A stop loss should be located above the breakdown volume bar, and a potential of the deal is more than 80 pips. So with the Australian dollar, short positions after the confident breakdown of the level of support. And our last instrument for today is gold. The price continued its downward adjustment, but if you take a look at our volume chart, here we can see that this drop was smooth and on the average volume. Therefore, we can't allocate any new volume level other than, and given the presence of the strong uptrend with gold, we still should give a little preference to long positions. But we can enter the market only after stoppage of this correction and a resumption of an abrupt rise supported by the large volume, which will be a more reliable signal for entering the market. A stop should be placed below the beginning of this surge, and the potential of the deal is more than 150 pips. So with gold, long positions are still in priority. If the price carries on falling, we still should stay out of the market. Let's take a look at this sentiment. This indicator confirms our scenario with the pound, the yen, the Australian dollar, and gold, which is a great additional signal. As with the euro and the Canadian dollar, we can consider new positions here only after the confident exit of prices from local ranges. For today it's all. Thank you guys for watching. Hope this forecast will be useful for you. Subscribe to our channel to stay in touch with the latest researches. Take care. Bye bye.